All right, cool. So when it comes to using the OTEs, you want to know which highs and lows. I'm going to tell you right now, yeah? So this is today's trading, yeah? This is the start of the London kill zone. For the recording, the London kill zone is 2 a.m. to 5 a.m. New York time. And the London kill zone is 2 a.m. to 5 a.m. My bad. And New York's kill zone is 7 a.m. to 10 a.m. Now, where do we see the retracement happening? Here. We had a move down, yeah, after midnight. Just for your notes, I'm going to get into this as well, deep into the mentorship, as well as the opening of the candle. The best buy is above, the best short, I mean, is above New York midnight. Yeah, so this is New York's midnight price. What does this candle do? Goes above it and shorts. That's something the algorithm does. The algorithm resets, yeah, it resets at midnight New York. Now, before the algorithm wants to go short, before it's there to deliver liquidity. So what does it do? There's this high, takes the liquidity above that candle, and it delivers it lower. Now, we got now regarding the OTE. You want to wait for a high to be made, right? So when this candle happens and these candles move away from it, we know that this is an established high, right? This high is now being made. So we can use that high. Then we see price going lower. So this is a good example to use. When this happened, yeah, you see at the start, we have this low, innit? And then we see the next candle goes lower. When that candle goes lower, you want to put your fib to the candle that's lower. Now, where did this retracement happen? Between what times? Between 2 a.m. and 5 a.m. That's the London open kill zone. There is always a trading opportunity within London's open kill zone. Yeah? Delete that one. This is also now a high. It doesn't really come back to it. But what price does do, you see when this candle moves away from this candle. Yeah? You lot can see this candle, right? Let me just zoom in for this bit. So this candle, when this candle moves away from it, what does it leave when this candle moves in one direction? What gets left when price moves in one way?
Imbalance.
Imbalance, yeah? Imbalance, exactly. Now, when you see that, this is the close of the imbalance, right? This is the close of the imbalance. We don't always want to see the close of an imbalance. It's nice to close the whole imbalance, but don't think that price always will come and close the whole entire imbalance. Just the 50% is what we want to see closed of a candle. Yeah, just 50% of the imbalance is what we want to see closed. Because now let's go back to that algorithm. Yeah, let's have a conversation, one of you. Does an algorithm, yeah, with the algorithm is just a robot. Does it have eyes to know when it completely fills the gap? It don't, right?
What was it? Just
No,
guessing.
it doesn't.
It
Yeah.
doesn't guess as well. But what about this? What about if I could an algorithm? When price fills X level of imbalance, assume is filled and look to trade away. Does that make more sense?
Yeah.
It does, doesn't it? It makes a lot more sense. And you're going to see that's why 50% of the candle in the order block makes sense and 50% of the imbalance. If you go and back test, yeah, how many times just 50% of the imbalance gets filled? It can go much deeper than the 50%, don't get me wrong. But don't be scared to enter at the 50% and have your stop loss above the imbalance. Don't be scared, because when you code an algorithm, you need to code boundaries for it. There's in maths here, there's something called bounds. There's always an upper bound and there's always a lower bound and there's always a mean threshold within the two bounds. Yeah. This is the upper bound. We'd like to fill the whole thing. However, the algorithm, the way it's programmed, when it just fills just 50% of the imbalance, it then assumes it will be filled. Yeah, it wouldn't need to go and fill the whole thing. It doesn't. A lot of the time, it doesn't go and fill the whole entire gap. It's nice to, but it doesn't always do that. So in this candle, this is an entry model right here that you can use as well. When you see that price, it's got willingness to go lower. Yeah. So you see like what happened here. Price goes higher and then it goes lower. Yeah. From here, you know that price has a willingness to go down, and the overall daily is down as well. So what are you trying to do? You're trying to get what? Short, right? You see that there's an imbalance left here. There's not really any imbalances left here as well. This candle closed these imbalances, right? This new imbalance is created. You could have got short anywhere within this imbalance that was created here. Specifically at the 50 or above is the best. Because remember, what is 50% on the fib?
0.5.
What
Premium.
discount?
It's
Premium.
it's fair value, right? It's the same thing. Inside an imbalance, there is the whole fib, yeah, the whole logic of a fib. The entire 50% is fair value. Below that is discount. Above that is premium. If you're trying to short, are you trying to short in the premium of the imbalance or the discount of an imbalance? What are you trying to do? You're trying to short
Premium.
in the premium. Exactly. Have you not ever thought about applying premium and discount to your imbalances? People just look at imbalances for, oh, there's a gap there. No. When you see an imbalance, what I want you not to do is outline the whole imbalance and measure it with a fib and see where is the premium and the discount of that imbalance. Now, if you're trying to sell off that imbalance, where do you want to sell within using the discount and the premium analysis? Where do you want to sell within that imbalance?
Above the 50.
Above the 50, because logically that is the best bargain for you. You are getting the highest price to sell within that imbalance, right? It's so simple when you break it down. Everything is you're gonna realize, yeah, everything is gonna come back to premium and discount prices. The way I'm teaching you guys, everything was gonna come back to these premium and these discounts. Yeah, there's a whole matrix. It's called the premium discount matrix. That is when I teach you like that, it is going to click. But I need to, build up your high time frame skills so that it's gonna make sense. London finishes. The time in between the London Open and the New York Open, we call that London lunch. That is a time you don't want to trade. Yeah, in between the sessions, you don't want to trade. Now, just before the start of New York, it's very, very common to see a run up. It is common to see a run up. Yeah. Oh, I don't have the fib tool here. I was thinking, where is it? Oh, crap. It's another OTE. Now, going back to imbalances. What does this candle leave when it goes down one way? Imbalance, yeah? Where does a candle come and fill it to? Oh, damn, that was loud.
50%.
It comes to the 50% and it trades off of it, yeah? Wait, is that my mic or someone else's? Oh, it's gone now. And it just trades off and it goes one way. You see here, this is just one of those times where you just don't get lucky to get a retracement. I had that, oh, well, this trade is semi-playing out, but the time of day that we're in, 9:23, you're not going to see it unless Ukraine gets bombed again. You're not going to have no volatility, really. This is, yeah, for the recording, this is called a mitigation. When you see consecutive up candles, yeah, it won't be a mitigation unless there's disruption with a bearish candle. If there's 4 up candles in a row, this becomes your mitigation block. Yeah. Now within the mitigation block, it's a good shorting area within the mitigation block, given that your overall bias is bearish. Yeah. Now, of the last candles within the mitigation block is the order block. And why did this one stick out to me? Because we have a gap, yeah, an imbalance, and we have an order block. So I don't always trade at the order block here. I'd rather take the gap over the order block because when we go over the matrix here, it talks about the importance of gaps and order blocks, mitigations, breakers. It talks about which one to take. A lot of the times, people get confused there. What do I take? Do I take the breaker? Do I take the imbalance? Do I take the order block? Like, which one am I trading off? There's sometimes you'll see like three things in one point, innit? Like you'll see there's an imbalance here, there might be an imbalance there might be an order block here. Do you know what I'm saying? And you get confused. The PDA matrix is what simplifies that. Yeah. You'll see my entry is just shy of this order block entry. It's closer to the 50% of this candle because I wanted to see the 50% of this candle get tested to because that's, you know, fair value of the, what's it called? The imbalance. The price didn't really get off there. I mean, I don't think it's gonna come back there. It probably will trade. If it does trade down, it has imbalance from here. It has this imbalance to fill within these two candles. And it could react off this order block. When I mean react, I don't mean it's gonna bounce off and become bullish. I mean price could stall there. It will just stall because the algorithm will realize that I've traded to an order block now and it will start to stall. It could trade straight through it, but the algorithm it acknowledges that, or it acknowledges that as a discount order block, and it will think that I've now traded to a discount order block. Let me do what? Okay, this is one thing I want you to do. Every single time the algorithm trades to some sort of premium or discount order block or gap or whatever, it will need to accumulate more orders. Whether that's for a minute, whether that's for an hour, whether for that's a day, I don't know the time aspect. Yeah. But the algorithm will accumulate orders. There's something called accumulation, manipulation, and distribution. That could happen. Before there is a move, remember what I told you in the 3 lessons. Before there's a big move, what happens? There's what? Is there consolidation? Is there a move up or move down? What happens before a big move usually? One of you guys.
Consolidation.
There's a consolidation, exactly, because the consolidation is engineered into the market. There is no way consolidation can be made if man controlled this market. There is no way. A consolidation is so perfect. If it was buying and selling happening in the market that controlled the market, think about it. You will need the exact level of buying and exact level of selling simultaneously happening, yeah, for you to create a perfect trading range. Because consolidations, we realize like it it's so clean. Like the lows and the highs, they're so clean. You can draw lines and it connects. It's too clean. There's no way. It's an algorithm that engineers it. It's a robot that engineers it. And the reason behind the consolidation, it accumulates orders. It creates sentiment. Whenever there's a consolidation, there is always buyers and sellers. Sellers sellers that want to sell when price breaks below it, and buyers that want to buy when price breaks above the consolidation. You don't know what breakout traders are, right? People that buy on the breakout. So like there'll be that support and resistance. Yeah, breakout trade. Breakout trading is the most traditional form. Yeah, and that's how large institutions trade. You know, large institutions on the high time frames, they will have buy orders above highs and lows, and they don't trade with order blocks. I don't know who made this up that these large institutions trade with order blocks. Large institutions trade based off speed. All they care about is the speed of entering and exiting a trade. They pay millions and billions for these supersonic algorithms that literally in and out, in and out, in and out. They don't care about this order block. Do you think they care about your fair value gap and this thingy? They don't care about that. That's all they care about. They care about traditional breakout trading. That's why the algorithm is designed to manipulate against traditional. It's not out there to get me and you, retail traders. It's there to deliver liquidity between the big players. The large sum of liquidity is not derived from us. It's derived from the large institutions, the people with the deeper pockets. Yeah. It's just we get clapped as a buy one, get one free with the big boys because of the lack of education of the forex market, if that makes sense. So if we go here, this is our high, significant low. Yeah. Now, there's a gap in here, yeah? When looking at the OTE, if above the 79, there is like a little, like there is gaps or order blocks above it, don't be scared to see if price does have a willingness to trade above it. If you want to get short, if you want to be short and just get into a trade, by all means get in above. But you see when the trading range is very large like this, yeah, you will have a very tight stop, because where does the stop always go? It always goes above 1. So your stop loss here would have been like 20 odd pips, probably. But your TP would be below here. And that would be like that trade might take a whole day to unfold. I don't like to use it like that personally. I'm like more of a scalper, day trader. I don't like to do that type of stuff. For the recording as well, yeah, there was a few people that used the OTE like this. Let me delete this box. They use the OTE like this. So if they wanted to get an OTE to sell, they would do something like this. Let's go back up here. They'll do something like this. Like, so they'll have a high, and instead of going to the low, like here, instead of going to the low here, they would go to the low here. And then they'll wait for price to come into these areas here. That's not how you do it. Yeah. For the OTE to work, you need a high and a low. When you're shorting, you're going from high to low. The reason being, when all the fib does is shows the level of retracement. So when you go from high to low, what the fib tool does is it outlines the retracement and how great the retracement is within this trading range. So from this high to this low. Now, you wait for a high to be made and you wait for a low to be made. Now, when the high and the low is made, it's just a waiting game till you get to your optimal trade entry. Yeah. One sec. Yeah, it's just a game of waiting. You see price reacts off of this candle. Okay, this candle trades up into the optimal trade entry. 62% is the start of the optimal trade entry, and price comes down, breaks below.
Can I ask a quick question, please?
Yeah, go for it, bro.
Just for what you said in the first part about figuring out what the higher day is, you
Yeah,
said something about there being something to the left and to the right of it,
yeah.
like a candle. I can't remember what you said, just for my notes.
There'll be stuff about, okay, so we're gonna go more in depth in that as the mentorship progresses here, but essentially the high of the day and the low of the day will be made at important aspects that the algorithm will recognize. Yeah, it's not random. The high of the day and the low of the day, the algorithm will price it in at logical levels within the market, whether that's at an order block, whether that's at a mitigation, whether that's at a breaker, whether that is to fill a gap, or whether it's above old highs. It will make the high of the day at a logical level. Yeah, if you lot want to see for your own study, look at the last look at the last 3 or 5 high of the days across a few pairs. So GBP USD and Euro USD. Yeah, and if you want AUD USD, look at the lot. In fact, look at the last 10 high of the days. Yeah, and look at to the left where the high of the day lines up with. You will start to see something. The high of the day will line up with some sort of order block on the left. It will line up. It will either be used. The high of the day will run above old highs on the left, because remember, it will take out liquidity as well. And then it will make the high of the day above that, yeah, taking the liquidity above the highs and then breaking down, or the high of the day will be at a gap. There's nowhere else you will find the high of the day being made. It has to be, the high of the day is always something within the matrix. You lot don't know what the matrix is yet. We'll get into that, like, I think in a month's time, we'll be onto that. But there's always a logical level for the high and the low of the day to be made every single time, without a doubt. Trust me. Any more questions? Everyone's good with the OTE now. Like, there's no questions on how to draw the OTE with the fib. Or is anyone still confused? Just to reiterate, the OTE, the fib tool, all it does is outlines the premium and discount of the range that you use the fib from, the high to the low. So this high to this low again. Whenever you want to sell, you will always want to sell about 50%. You know, why would you want to sell at a discount? You want to buy at discounts and sell. One sec. Okay, yeah, sure. I'll show you my fib settings. So, yeah. Crap. Here's my fib settings, yeah. 0, I don't have this one on. 62, 1. You don't need these negative ones, by the way. On the right, 705, 0.5, 0.79.
So we can take the negatives off.
You don't need the negatives. I just have the negatives there from, I don't know why I have them, but yeah.
Okay.
They're not significant. The only ones you care about are these ones. The fib just outlines the premium and the discounts within a trading range. That's all it does. Now, the OTE, you can, okay. Has anyone seen Inception, that film? Where they like have dreams and shit and they go from dream to dream to dream and shit like that. Has no one seen that? It's pretty.
Yeah.
Yeah,
know
bro,
when,
I've seen that.
yeah, you know what I'm saying, yeah?
It's hard.
You know when they're like, you're in a dream within a dream within a dream and shit like that? Do you know what I'm saying? You can be in a daily OTE. Okay, let's go on EURUSD and I'll show you what I mean. You can be in a daily OTE, and within that daily OTE, you can be in a 4-hour OTE, then a 1-hour OTE, then a 15-minute OTE. Do you know what I'm saying? On the daily, yeah, don't be scared to do the OTE on the daily. I don't mean trade off of the daily, but if you see rejection off, so for example, why am I using this low, not this low? Because this low hasn't been made yet. We're assuming that this low is not being made. From this high to this low, yeah, that's the trading range. Agree or not? That's the trading range, yeah? Now this is the daily, and this is very powerful as well. When you have a trading range in the daily, yeah, you want to be buying at discount and selling at premium. How long does price stay above the 50%? It doesn't stay above long, right? So you know from here when you see this double rejection of this thingy of the OTE on the daily, what do you assume now? On the daily, yeah? What do you assume now? Let's say this isn't the daily, yeah? Forget the time. If this was a 15-minute chart and you see this is the OTE and at the 17.5 level, you see 2 wicks rejecting off the 17.5. What do you expect now? Price to go up or price to reject and go down?
Reject.
Price to reject and go down. The only difference between the daily candle and the 15-minute candle and the 15 time frame, do you know what it is? The daily candle takes a day to close and the 15 takes 15 minutes to close. There's nothing else that changes. The same patterns happen on the daily, same patterns happen on the 15. It's fractal, yeah? So, you know when you get this double rejection, what's your bias going into the next day? And what's your bias
Bearish.
you're bearish, okay. And that's on a daily level, right? And that's on the daily thingy. That's on the daily time frame, right? So
Downside.
yeah, so now you're expecting downside from here, yeah? You're expecting price to trade down. So what you doing intraday? Of daily, we have rejected off the OTE area and now it's going down. What are you doing intraday level the next day? Looking for what?
Shorts.
Shorts. Exactly. Do you see the power of the daily? Do you see how powerful it is? When you're seeing rejection of the daily, the next day you have your bias. So when you reject off here, what do we assume is going to get taken out?
The sell side.
Sell side, yeah? Or even, yeah?
Yep.
Even. Let's see when it rejected off here, yeah? What's this? What's this candle? It's an order block, yeah? When price trades to the order block, what do we assume? What do we expect to happen, or what can happen? Price to do what?
A big move of consolidation.
it will stall, listen, it's gonna reject off there, or it will start to stall. Price will like halt there, kind of, yeah, and it will accumulate orders to go long or to go short. So from here to here, we are short, yeah. When you see that this order box body gets completely disrespected, yeah, your eye should go to the next low. This is the introduction to the matrix, yeah. You're looking for things to get violated. When one thing gets violated, it's like a checklist. Checklist, order block violated. And then you look for the next one to get violated, and the next thing. Ultimately, the low. So every single day until you traded below this low, what's your bias? You're bearish, innit? Yeah.
Yeah.
Now, if you whose mic is that? Because it's my headphones are real loud. Sorry. Now from the daily, yeah, this is why I always say the daily is so important, because if you know the areas to reject off the daily, and the OTE can be used, listen, the best of you will be versatile with your thinking. You can use this as an entry technique, you can use this to know where price is going to reject off of. That's all it is. Yeah, on the daily time frame, you're looking for it for rejection areas. On the low time frames, you're using it for entry techniques, entry drill. Every single day here, you're using it to get bearish. It comes up in again, and guess what? It's rejecting off of it again. You're going to be bearish. When you have that on the daily, every single day, so you have the OT on the daily. So within the next day, what does it do? This imbalance is left, and what happens? The price trades into how much of the imbalance? 50% of it, right? You'll see that the imbalance as well is basically fully cleared, and then it rejects off of it, and it goes lower. Yeah, you'll see it comes up to the 50% of this imbalance again, and it goes lower. It's not cherry picked as well, just because I said the hour the 50%. This is random. I just went on the daily DXY Euro USD chart. Yeah, 50% of it, and trades down lower. Yeah. When you see this candle taking out this low, just know that price will come and absolutely smash that low, because it's taking out this low. There's a bunch of liquidity sitting here, bunch of it. Yeah. Ultimately, the bottom of the range, price will go take that out, and that's it. So we actually went off a tangent, but it was a good tangent because we went onto the daily again. You can use the OTE on the daily in order to find rejection zones on the daily, because all you want to do, guys, is find rejection zones on your high time frames. Use that as your bias for the day, intraday, because the intraday is backbone. The spine of the intraday is the high time frame analysis, and that's where you get your bias from. When you're seeing rejections off of daily key zones, yeah, so the optimal trade entry, and it's above an old high, yeah, in the optimal trade entry, you're seeing rejections off of it. Daily candle down, 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 down. This would have been such a good trading week if you lot knew this, because your bias would have been correct. It would have just been a matter of entry. Agree or not? Isn't that when you have your bias, it's easy, isn't it?
Yeah.
Yeah.
When you have your bias, it's so easy. You just need to be patient and wait. Okay, I just wanna. If I'm bearish, I'm just waiting for a nice high price to come so I can start shorting the shit out of it. That's it. Because the rest is done. You having your high time frame analysis from the daily, it's gonna remove the anxiety, that anxiousness when I don't know if I'm gonna be on the right side. I don't know. I'm gonna be on the right side. This is where you find it. Your high time frames. Let's go on the weekly. Let's see what it's like on the weekly. Oh, it's even better on the weekly, bro. One sec. Yeah, look, there's a gap here. From here, this candle makes a gap. It doesn't fill the whole gap, but it comes in and fills a lot of it. This is an OTE on the weekly as well. You can kind of see it with your eyes in it here, look. And it breaks down on all time frames. In all time frames that happens. Any more questions? We've got like 5 minutes. But was there any takeaway from the Zoom session? Was it good? Like, should we do more of these?
Yeah,
Sure,
bro,
hundred
definitely.
percent. Yeah.
Yeah, alright, cool. That's the only time you
Yeah,
lot fit for
100%
talking to me. I
bro.
was asking you guys, should we do another one? That's when everyone wants to talk, bro. Nah, it's good though. We'll do, you know what it is, yeah? Because the topics are gonna get hard. I'm not gonna lie to you. I'm gonna keep it 100% with you. The game goes deep. Like I told you, the rabbit hole goes deep and it's gonna get harder, yeah? A lot of this stuff is new to you guys, so maybe it's good to have these live Q&A sessions where you don't ask me questions. Because a lot of the time, you guys will realize, and every single day, I have like 5 of you ask me the same question. So it's more actually efficient if I leave it for the Q&As and one person might be asking the question everyone's asking and then I'll just answer it. That's right. No.
Makes sense. That's
Yep.
calm.
Yeah, bro.
Last takeaway, I know I'm just saying the same thing over and over again, but it's so important. Daily rejection zones give your bias for the next day and the day after that until the daily target is hit. So from here, when you reject it, when you see the rejection, yeah, you're saying, okay, cool, my bias is shifting to bearish. Where is my first target? I want to see how it trades to this order block. Smash through that. Okay, where's it going now? I'm bearish until we take out this low. Oh shit, this take out this low. Let's go take out this low as well. Boom. Simple. That is trading in a nutshell. It's not the end of the mentorship, but that's trading in a nutshell. The rest of the mentorship is going to go and where to buy intraday, methods used to get to the close to the high of the day, the low of the day, and just how to have just how to just trade better in a nutshell. Yeah. This one's recorded as
One
well.
question.
Yeah, go on,
Bro,
bro.
what? Go on.
Are you like a
Actually,
scalper or are you like an intraday trader?
You me myself.
Yeah.
Okay, so what
Yeah.
I do, yeah.
Yeah.
I in between scalping and intraday, so I can do both. I like to do both. I don't like to hold for longer than a day. I like to trade the
Okay.
daily range, if that makes sense. That
Yeah.
daily expansion
Yeah,
of the
it does.
candle, I like to trade the daily expansion of the candle, and I'll touch my style throughout the mentorship as well. Someone else had a question, right?
Yeah,
yeah,
that's
bro.
fine.
I was
Thank
just
you.
gonna say, what candles do you look at that your class as an imbalance?
All right, that's a good one. That's a good one. We're gonna have a whole lesson on imbalance, but in a nutshell, an imbalance, yeah, is where there is a lack of buying or selling within a candle. So you see this candle, it's wick to wick, yeah. So this wick, until forget that these candles, yes, forget this this wick happened, yeah. We're just looking at these 2 candles, yeah. From this wick to this candle, yeah, there was no buying happening. From this wick down, it was only selling until here, yeah. So there's been a lack of buy side being delivered. Now the algorithm needs to deliver fair buy side and sell side to the market at every single price. So there is an
Okay.
imbalance. So there's an imbalance between this candle's wick, and the close of this candle, because there's a wick here as well, innit?
Yeah. Now, word for that star.
All right. Anyone else have any questions? No questions? If there's no questions, I'm ending it, bro. I ordered some KFC. I'm looking to go eat that. So if you got questions, yeah, ask me. And it's your time now to ask me. Don't be shy.
Go eat that KFC, mate.
All right. If you lot do have questions that you
bro.
lot don't want to say on the thingy, on the recording for whatever reason, not comfortable, whatever, that's fine, innit? That's your choice. Message me on Snapchat, ask me in on the question sets on the Discord. You don't know I'm really active with replies, innit? I'm a homebody. I don't do nothing. Trade and I chill. That's it.
All right, bro. Thank you for the help. It was
All right.
really good.
All right, cool.
Thank you,
Next video should be coming out in a few days. We're gonna be going over, I think it's quarterly shifts, but more in depth.
Are you
You
gonna
gonna
drop
post
this
this?
later tonight?
Pardon?
Are you gonna post this in the Discord? I mean, in the Telegram.
In the Telegram,
Yeah.
yeah. Where do you want? Yeah, I'll post it in the Telegram. Yeah.
Cool.
Yeah, cool.
Cool. Anyone else have any questions?
Nah, that's it. Thank you, man.
That's it. All right,
I'm
cool.
good.
You
Cheers,
lot.
mate.
Yeah. Have a good night, you guys. Yeah.
Hey,
Alright,
you
thank
too,
you,
man.
bro.
All right. Cheers, bro. Have a good one, man.
See you later.